Hi guys, happy Independence Day. Today is, as you know, July 4th, 2025. Main motivation for this video is to introduce some companies whose business is relatively insulated from the tariff, right? As you know, the President Trump announced liberation tariff April 2nd, and 1 week later he also announced, okay, I'm gonna postpone 90 days. So now is July 4th, so 90 days deadline is just around the corner, right? And just in case anybody who may be again concerned about some negative impact of resuming of tariff on the stock market or individual securities. So I hope this video can be giving you guys some insight and some interesting anecdotal stories. And I'm gonna introduce TJMaxx. Its ticker is TJX. Another is ROST. Ticker is ROST. I'm not suggesting or encouraging you guys to buy this stock. No. I'm just introducing and giving you some empirical evidence. This consumer business model is relatively by far better insulated from tariff shock, as shown is performance during the second week of April this year. Okay, and let me go to these two companies' stock performance from late February this year to early April 2025. So during this 1.5 months period, if you look at this TJMaxx ROST stock performance, TJMaxx lost only 1%, which is blue. For your information, I downloaded all the data from Yahoo Finance, and the graph, everything, or data analysis are done with Python. So you can easily find the script to make this kind of a graph if you do Googling or if you depend on ChatGPT or Gemini, you name it. And ROST stores compared to TJMaxx lost a little bit more, minus 6.4%, which is a yellow line, compared to the stock value as of February 19th, 2025. If you look at the S&P 500 index, as ticker is GSPC in Yahoo Finance, S&P 500 index, which is a proxy for the market portfolio, and we believe S&P 500 is the most and the best diversified, risk diversified portfolio in the US market. And because there are 500 stocks, largest company stocks across 10 sectors, like consumer sector, energy, tech, communication, industrial, material, financial sector, right? Across the 10 sectors, we pick up largest 50 companies, and then we do evaluate average of price, that is S&P 500 index, proxy for the market and most efficient portfolio theoretically. And Nasdaq index is composed of roughly 2,500 stocks, and Nasdaq lost 22%. Red line here. Nike, as you know, Nike does not produce its sneakers or products in US territory, but they import from maybe Vietnam or Indonesia or China. So Nike lost 25%. If you look at Deckers Outdoor, DECK, you know UGG boots, and Hoka. Hoka is very popular sneakers brand. Deck lost 30% during this 1.5 months period. Tesla 34% down. Restore Hardware, they import a lot of furniture from Vietnam, right? And also Vietnam is one of the center through which China export to US and Europe. right? So Vietnam is kind of a center of China's transshipping hub, right? So restoration hardware lost 62% during only 1.5 months period. But if you look at the TJMaxx and ROST, they lost the value the least compared to other company, even bigger tech companies who are very strong and enjoying cash pile like $50 billion, even over $100 billion cash pile. Then why TJMaxx and ROST stores lost very little compared to other companies? Why? Because TJMaxx and ROST stores, their business model is insulated from this tariff shock, right? For example, they sell pretty decent quality housing stuff. It could be table or furniture or some clothes or cups, right? Even wine, glasses, whatever, from the major distributor like a Nordstrom or Macy's department store, right? Or even high-end department store like a Bloomingdale, because those companies cannot keep the inventory, the unsold housing stuff forever. Every 6 months, for example, or 1 year, or every 3 months, they have to keep the limit of their inventory, which is not sold yet. Then they sell it at a discount to TJMaxx and ROST stores. Also, TJMaxx and ROST stores, they buy at a much lower price from the major distributor, retail shops like Bloomingdale or Nordstrom. Then they are already insulated from the shock, right? They are still able to purchase pretty decent quality stuff from the companies who are hit by the shock, tariff shock first. That's why that kind of insulation effect is reflected in these less negative shock to TJMaxx and ROST stores. And let's take a look at the historical average performance of these two companies against Nasdaq and S&P 500. TJMaxx, they did the IPO 1987. ROST stores did the IPO 1985. So we cut off at the TJMaxx IPO day, which was late June 1987, and assume that all the four securities price was $1 as of June 29, 1987. Then let's compare their historical performance so far until yesterday, July 3rd, 2025. So if you had invested $1 in ROST stores in 1987, the $1 has been growing to $697. For your information, if you look at this gray vertical bar, that represent U.S. recession. The most recent recession was coronavirus recession, March to April 2020, and second most recent recession was the 2008 to 2009, the subprime mortgage crisis recession, and Lehman Brothers filed for bankruptcy protection, Chapter 11, September 15, 2008. It was a pretty long recession because it has been lasting 18 months from January 2008 to end of June 2009. And there was another recession, dot-com bubble 2001, and also 1991 recession after the Gulf War, right? And during that period, almost 40 years, actually 38 years, S&P 500 has been growing 20 times. Nasdaq index has been growing 48 times. TJMaxx, $1 invested in TJMaxx stock 1987 has been growing to $336. A pretty good performance, right? So these are two consumer business model securities has been outperforming market index more than 10 to almost 35 times. S&P 500 grows 20 times. ROST stores grows almost 700 times. So compared to Nasdaq, more than 15 times, right? And TJMaxx also is our performance was almost 17 times larger than S&P 500, right? So in the long run performance, also short run performance, especially during some shock like a tariff shock. And 4 months ago, these two consumer business model is proving that they are well positioned for outside shock, right? And what about the 20 years of performance? TJMaxx has been growing 27 times from 2005 July until yesterday. For 20 years of history, ROST stores has been growing its stock value by 22 times. $1 2005 is $22 2025. However, Nasdaq index around $10 and S&P 500 around $5.2, right? So these two securities have been proving, right, for 20 years of history and 40 years of history and recent 4 months of history, they are pretty well positioned business model. Hopefully this video can be very useful for you if you are thinking about long-term investment, especially preparing for your retirement or your own some plan to grow and boost your capital gain in a long run period, not short run period. Hopefully this video can be very insightful, useful for your long-term investment. If you like this video, please don't forget to subscribe, click like and alert. Thank you very much.